Hey everyone, I didn't plan on making a video in between my stock market scenarios video, but after reading some of your kind words and comments, I wanted to share a few basic essential tips I have for investing in 2020. I understand a lot is happening right now. The market is moving rapidly, headlines are coming out everywhere, and the S&P 500 is on the verge of notching all-time highs. Given everything that's happening and also some of the comments that you all shared with me, I thought this would be a good time for me to share some investing tips that I think are really important and applicable in today's climate. And I wanted to talk about that before I got too deep into my long-term analysis on the US stock market and how I think this will impact the economic conditions that we will see in the next few years. So here are three quick investing tips that I'd like to share with you all today. I'm on a wave, slept on, no, I got next on. I'm on a wave, I'm on a wave. The first one is don't jump into an investment because of the fear of missing out. You may not have heard of the acronym FOMO, but I'm sure everyone has felt this kind of emotion before. You may have personally felt this emotion in many different ways, whether it was deciding to not go on a vacation and then regretting it later, or rejecting a party invitation and then seeing pictures and videos on social media of everyone having such a good time and you're like, oh, why didn't I go? Or if you're an investor, you may have felt this emotion when you didn't buy a certain asset at a certain price and now you're looking at the price skyrocket and you're like, oh, why didn't I buy? So we've all felt this in one way or another. However, in regards to investing, when we're using our emotions to guide our investments or our fear, a lot of times this is not going to end well. Here's a simple depiction of the fear of missing out when we're looking at these kinds of tops. This is usually the time where investors are the most confident because they are plagued by recency bias and believing that whatever has been happening is going to continue to happen. The same thing happens at the low extremes where investors feel that prices are going to continue lower and lower, and so they capitulate at usually the worst time. Acknowledging this and the basis behind investor psychology should allow us to understand that our emotions, while completely normal and justifiable, are not good measures or things to go off of when investing. There will always be opportunities in the market and in investing. And it's best to approach an investment opportunity level headed, understanding what you're investing in, why you're investing in it, what your plan is, and also the risks and rewards associated with that investment, rather than jumping into something that you're unsure about, that you heard from someone or you heard on a headline that it was going to do this and that. It usually just doesn't end well. My second tip is stick to what you know best. We are in crazy times right now, and I think it's really important for people to stick to what they understand best in their forte rather than trying to learn things and risk losing a lot of money or paying a lot for mistakes during such uncertain and volatile times. If you're a conservative long-term investor, then it's probably best to focus on your portfolio and your long-term plan and adjusting things that you see fit given new information. This is a much more sound approach than putting a large proportion of your portfolio in a certain stock or commodity or putting it in a trading account and risking it when you're not experienced, especially in these kinds of market conditions. Similarly, if you're a person that doesn't have a lot of investing experience and currently hold no investments, then this is probably not a good time to start jumping into a lot of things or even a conservative portfolio, just because of how much risk there is right now in the markets. My third tip is to practice what you want to learn and to learn from the mistakes of others while also allowing yourself to make mistakes. This connects with my last tip, where it's really saying if you want to learn something, allow yourself to make mistakes without having to pay such a large penalty in order to learn. If you're wanting to learn how to trade, open up a paper trading account, which is completely free. You don't have to put any money in it, and you're trading with fake money essentially. And so you can make mistakes. You can try out different systems and strategies and allow yourself to learn and actually enjoy what you're doing rather than just trying to make a quick buck. And also continue to stay tuned for these videos because I'm going to be sharing a lot of things that I think are really helpful and have helped me out as far as being a disciplined investor and viewing the market and viewing opportunities not as things that you have to catch, but things that you prepare for and plan for and approach in a way that's not so emotional, but more calculated. And that'll allow you to be so much more confident in your investment decisions. Anyways, I hope this video is helpful and that it maybe even relieves some people that were feeling a lot of anxiety and feeling like they needed to jump into something or get into something. And I just want to let everyone know that there will be opportunities in the future. And it's best right now to learn and research and figure out what your plan is, who you are as an investor before jumping into those kinds of things. And we'll talk about in the future how we can identify investment opportunities so we can be confident and secure in our investment decisions. Thanks so much for watching, and I will see you all next time.